This is the briefing for Friday, January 26th. I want to start with the longer term charts tonight. This is a weekly chart of the spiders. And you can see that it was about a week ago that we broke out to new all-time highs in the S&P. The problem with that was that we broke out in terms of price development, but you can see here, based on even a weekly chart, that breadth was diverging and diverging pretty dramatically. And so it was suggesting to us that the market was not strengthening as it broke out, but it was weakening, suggesting that potentially this is going to be a false breakout. You see volume in the spiders fell off pretty dramatically as well. If I change this back to a daily chart, you can see here's the breakout. Here's 6 days. This was last Friday's trading and the breakout. Now breadth was fairly strong. This is S&P breadth, so it was right at 239. So about 50% of the shares were trading higher as opposed to lower. And then as this rally for the rest of the other 5 days occurred, you can see that breadth just continued to fall off and deteriorate. This was yesterday's trading, so we did get a strengthening in yesterday's trading of breadth, but that fell off pretty dramatically. We made a slight new high today, but it wasn't sustained, and you can see that we only had 39 shares positive in terms of the S&P 500. Looking at the NASDAQ or the Qs, you can see, about a week ago we broke out once again. This is a weekly chart. We had follow through in this week's trading. But you can see what was happening with NASDAQ breadth also. You can see a pretty dramatic divergence that was occurring. Volume was falling off as well. So really the market, as it has broken out of these all-time highs and this rotational pattern, it's pretty easy to see the rotation that we've been in for quite some time now. But the market internals are not strengthening, and that's pretty obvious looking at it right through here. I want to switch this back to a daily chart also so we can see where we are. So you can see this is the last 6 days of trading right through here. You can see the NASDAQ now showing a little bit of weakness in that it is showing a return to or a turn to the downside. But even in that turn to the downside, volume is falling off. So I'm not so sure that really means a whole lot, or that it's going to give us something that will come down and test intermediate term support right around the 414 area, right through here. This is just very, very difficult market right now. And looking at the Russell, you can see the Russell on a weekly basis. It is still diverging from the other indices. This was the all-time highs, and you can see the rotational pattern that it's been in for quite some time now as well. This rally, this breakout rally, you can see that volume fell off pretty dramatically in the last couple weeks of that rally. Got a little bit of a pickup in volume, breadth diverging as well. So really no strength coming into the Russell as well. And here's a daily chart of the Russell. So you can see we're testing that upper extreme, and this is this week's trading in the Russell. I mean, we really just have gone nowhere. Volume falling off, that's typical for a rotational pattern, but breadth weakening as well, and not strengthening. So if we anticipated a move above or outside of this area of rotation, certainly the market is not strengthening to suggest that. I want to go back because I think I missed something on the Qs. Let me switch this to a weekly chart. Yeah, I forgot to point this out. This week's candle, this is a selling tail, and a pretty significant selling tail. So it does suggest to me that potentially the NASDAQ is beginning to show more weakness to follow along with the Russell, and that the S&P or the spiders are holding up a lot better than the Russell and the NASDAQ right now. So it's going to be interesting to see what happens. Now, I should point out there is a lot of economic news, including a Fed decision on interest rates next week. So that information will be market-moving information. It could give the market the gas it needs to strengthen the internals and continue a breakout move, or it could do just the opposite, and we could see lower support levels tested as well. This is a 30-minute chart of the spiders and a 30-minute chart of the Qs. And you can see pretty clearly this is the last 5 days of trading with 2 days of rotation, a little breakout move, and then 3 days of rotation. Same thing with the Qs, 2 days of rotation, a breakout move, and 3 days of rotation. Now, this is a short-term divergence. You can see the S&Ps or the spiders are beginning to test the upper extreme. The Qs are testing the lower extreme. So that's going to be very interesting if that is broken next week. Next level of support would come in right around the 420, and if this level, this 485 level, is broken in the spiders, the next level of support is going to come in right around the 482, 483 area. Looking at the short-term chart of the Russell, you can see that it has been in a rotational pattern for the last 5 or 6 trading days. Really, every time it tries to break out to the upside, we get a lot of selling that hits the Russell, but it has been unable to break through this lower extreme right around the 194 area. So really, we're just in a pause situation. Now, looking at where we are in terms of the other internals that we look at, in terms of overbought and oversold, you can see that we are approximately basically almost neutral in the NYSE, and we're neutral in the Nasdaq. I lost my upper and lower extreme trend lines here, but this is basically neutral. So it's really not giving us any indication of whether we're going to be seeing a move to the upside or to the downside. And I think the market this week is just waiting on the news for next week. Looking at the percentage of stocks above their 50 and 200-day moving averages, you can see the deterioration that has occurred this week in stocks above their 50-day moving average, and the same thing with the 200-day moving average. This is for the S&P 500. In terms of Nasdaq stocks, you can see the deterioration that's occurred, and we got a little bit of a bump 2 days ago or a couple days ago, and now we've got another turn down. This is the percentage of stocks above the 200-day moving average. And in the Russell, the deterioration is a little bit more exacerbated. You can see that we've lost about half of what the gain was on the move to test the upper extreme, and the 200-day moving average losing some strength as well. So basically, we've got a big week coming up. It's going to be very interesting to see the market's reaction to the news that comes out, and it's going to be very, very important if this rally and this breakout move above the all-time highs is going to be sustained. It's going to be very important to see more buyers coming into this market, so volume should increase, and it's going to be very important to see breadth and some of the other indicators, internal indicators, strengthening as well. Otherwise, we're likely to see some type of rotation back to the downside. I wish I had more news. I wish I could be more specific, but the only thing we can do is monitor the shorter term support and resistance areas. And as you can see right through here, let me get the right chart up here. You can see right through here that upside resistance short term 489, downside support 485, next level of support is 482. That if that's broken, then we're going to see potentially a big move that we saw on this. This move here could get retraced. In the Qs, 430 is the upside resistance. Downside support comes in at 423, and then below that is 420. So that's kind of where we are. If we break to the upside, I want to see these indicators beginning to slant upward, not downward, and like they are at least right now. And you can see the deterioration that's beginning, or that occurred all through this week. Have a great weekend, and I will pick this back up for subscribers on Monday.